Thursday, September 3rd, 2020, Maneco 64, home of alternative economics and contrarian views. Today I'm going to talk about how debt is at the heart of financial bubbles and the current everything bubble. And I'm going to look at the South Sea bubble as an example. Many people don't realize that at the time, the British government had a lot of debt, and the South Sea Company was just a scheme to try to improve the financial situation of the government, and it made it even worse, of course. So I'm going to reference this book here, Extraordinary Popular Delusions and the Madness of Crowds by Charles Mackay. It's a classic, and I'm going to reference Wikipedia. So let's quickly get into the chapter, The South Sea Bubble, in Charles Mackay's book. So it says, the South Sea Company was originated by the celebrated Harley, Earl of Oxford, in the year 1711, with the view of restoring public credit, which had suffered by the dismissal of the Whig ministry, and of providing for the discharge of the Army and Navy debentures and other parts of the floating debt, amounting to nearly 10 million sterling. A company of merchants at the time, without a name, took this debt upon themselves, and the government agreed to secure them for a certain period the interest of 6%, to provide for this interest amounting to £600,000 per annum. The duties upon wines, vinegar, India goods, wrought silks, tobacco, whale fins, some other articles were rendered permanent. The monopoly of the trade of the South Seas was granted, and the company, being incorporated by Act of Parliament, assumed the title by which it has ever since been known. So there you go. It was created by an Act of Parliament. What does Wikipedia say about the South Sea Company? Well, it says the South Sea Company, the governor and company of the merchants of Great Britain, trading to the South Seas and other parts of America, and for the encouragement of the fishery. So that's the full name of the company. It's like the Bank of England. The official name of the Bank of England is the governor and company of the Bank of England, right? So it was a British joint stock company founded in 1711, created as a public-private partnership to consolidate and reduce the cost of the national debt. There you go. We've seen in the last 20 years how the Federal Reserve, which is a private monopoly, right? Just like the Bank of England, just like the South Sea Company, has been working together with the government, trying to keep things going, trying to inflate the stock market in order to keep the debt that's owed by the state running, in order to keep the national debt from collapsing, right? We get more and more easy money. Of course, the everything bubble is a much bigger scale, and it will have much bigger repercussions. Did you know that the debt that was incurred by the South Sea bubble is still part of the national debt in the UK? I bet you didn't. We'll come to that in a minute. So let's look at the consequences of these bubbles quickly here, and how nothing really ever changes either. The people at the top, a lot of times, are protected. Not everyone, of course. So we'll go through recriminations here on Wikipedia. It says by the end of September, the stock had fallen to £150. So here's a chart of the stock price of the South Sea Company. Does that ring a bell? NASDAQ, Tesla, and others. Company failures now extended to banks and goldsmiths, as they could not collect loans made on the stock, and thousands of individuals were ruined, including many members of the aristocracy. So Bubbles like this affect everyone, the common person, the aristocrat, everyone. With investors outraged, Parliament was recalled in December and an investigation began. Reporting in 1721. Interesting that this is just happens to be 300 years ago. The bubble burst, the South Sea bubble burst in 1720. It revealed widespread fraud amongst the company directors and corruption in the cabinet. There you go, government. Among those implicated were John Aylesby, the Chancellor of the Exchequer. So that's the Secretary of the Treasury equivalent. James Craggs, the elder, the Postmaster General. James Craggs, the younger, he was the Southern Secretary, and even Lord Stanhope and Lord Sunderland, the heads of the ministry. Craggs the elder and Craggs the younger both died in disgrace. The remainder were impeached for their corruption. The Commons found Aylesby guilty of the most notorious, dangerous, and infamous corruption, and he was imprisoned. The newly appointed First Lord of the Treasury, Robert Walpole, successfully restored public confidence in the financial system. However, public opinion, as shaped by the many prominent men who lost money, demanded revenge. Walpole supervised the process, which removed all 33 of the company directors and stripped them of, on average, 82% of their wealth. The money went to the victims, and the stock of the South Sea Company was divided between the Bank of England and the East India Company. Walpole made sure that King George and his mistresses were protected. So there you go. And by a margin of 3 votes, he managed to save several key government officials from impeachment. In the process, Walpole won plaudits as the savior of the financial system while establishing himself as the dominant figure in British politics. Historians credit him for rescuing the Whig government and indeed the Hanoverian dynasty from total disgrace. So it was a close call. I wonder if this time the establishment, not only in the UK, but also in the US, will be able to save themselves. I know they're making bandits right now, making money hand over fist because of the current bubble, but you never know. Bubbles or stock market bubbles, they're like escalators. You go up the escalator, right? And it's a one-way move, and it takes a little while. But when it bursts, it's like going down an elevator shaft, and that's why it's so dangerous. I got that analogy from, who was it? Scott Minard from, I think he was speaking at Davos, actually, which I've criticized Davos, of course, but he was speaking at Davos. He's the CIO of Guggenheim Partners, investment firm, and that's what he said. That's what stock market bubbles are like. That's why so many people are ruined. As you can see here, even Isaac Newton went broke because of the South Sea bubble. I said that we're still here in the UK paying for the mistake made 300 years ago, and here we are. It says government debt after the 7 Years' War. The company continued its trade when not interrupted by war until the end of the 7 Years' War, 1756 to 1763. However, its main function was always managing government debt rather than trading with the Spanish colonies. The South Sea Company continued its management of the part of the national debt until it was disestablished in 1853. So the South Sea Company kept going for another 130 years, at which point the debt was reconsolidated, not paid off. The debt was not paid off by World War I, at which point it was consolidated again under terms that allowed the government to avoid repaying the principal. So there you go. We're still paying for that. Of course, nowadays it's just a few million. The UK has 2 trillion in debt. So there you go. Most people think that bubbles are created by rampant free market. But no, not in the case of the South Sea bubble, as we saw. So if we didn't have the Federal Reserve, the ECB, the Bank of Japan, the Swiss National Bank, or the Bank of England colluding with governments, creating this fake money or fake credit with no backing, we wouldn't be in the current situation, in the current everything bubble. That's gonna really ruin millions of people, in my opinion. And that's why you need to be careful, because greed will get the better of you. A lot of the people that went bankrupt and got ruined, they borrowed to buy the South Sea stock, right? Because they're greedy. And the same thing is happening today. That's called margin, right? So let's quickly look at where the markets are this morning. What I've noticed with the markets, yes, yesterday was a great day for the stock market. The Dow was up almost 500 points. S&P was up 50. NASDAQ composite was up over 100. But I noticed that the longer term yields actually dropped, which doesn't make sense. That's a sign that this is a big bubble, in my opinion. Usually, having worked in the markets for over 20 years, what happens in a market that is functioning relatively freely from government and central bank interference is that if financial conditions get really crazy, like stock markets going up, you get interest rates going up as well. Bond prices go down, because that's how the financial free financial market should regulate things. If things get too frothy, money gets a little more difficult to get and interest rates go up. But in our current conditions, we see yields going down while stock markets go up 500 points. It doesn't make sense. We've got gold at 1935. It's down just over $7. Low has been 1927 and the high 1951.60. So silver right now is down 24 cents at 27.21. We've traded as low as 26.73 and as high as 27.74. So still consolidating. Yeah, we had that big move lower 2 or 3 weeks ago. And now it's just consolidating. We're just like unwinding the momentum that the market had and setting up, I think, for another move higher in precious metals. The Dow futures up another 102 points, 1/3%. S&P is up 0.2%. NASDAQ 100 future is actually down slightly. The dollar is stronger, as I said. Sterling is below 133 now, down 0.4% at 132.99. The euro is almost back down to 118. So we've seen the euro go from 120 a couple of days ago now to 118.15, down a third. The dollar's unchanged versus the yen, 106.20, and it's up slightly versus the yuan at 683.60. Crude oil was down quite a bit. WTI is trading at 41.37. It's down about $2 since I made my video yesterday, but it's down 30 cents overnight. So we saw it drop quite a bit yesterday during the day, of course. Let's look at the 10-year yield. So we are at 0.66, basically unchanged. And yesterday, when I made my video, I think we were around 0.68 or 0.69. So we saw also the 30-year yield yesterday drop about 3 or 4 basis points. It's up about 1.6 this morning at 1.39. The 2-year yield is at 0.14. So that's slightly higher there. There you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.